You're listening to the Options Insider Radio Network. For more quality options programs, visit www.theoptionsinsider.com or search for Options Insider Radio Network in your podcast provider of choice. Listeners can also access all of our programming through our mobile app, available in iTunes and on Google Play. Don't forget to follow along with your favorite programs and submit your own questions for the hosts at twitter.com/options, facebook.com/theoptionsinsider, or via questions at theoptionsinsider.com.
And now, it's time for the show that breaks down the options market, from unusual activity alerts to market analysis, strategy overviews, listener questions, and much more. If it involves puts and calls, then our all-star panel will break it down. It's time to hit the option block with your host, Mark Longo from the Options Insider Media Group, and co-hosts Uncle Mike Tosaw from RCM Asset Management, Andrew the Rock Lobster Giovinazzi from OptionPit.com, and Mark the Greasy Meatball Sebastian from OptionPit.com. And now, get ready to hit the option block.
All right, everybody. That rockin' tune means it's time once again for a little show we like to call around here the Option Block, your twice weekly sojourn into all things options related. Maybe you like some strategy? Well, we got that for you. Maybe you got like a breakdown on what's trading today? Well, we got that for you too. Maybe you like us to answer your questions? Well, we've been known to do that on occasion here on the program as well, and a lot of other fun stuff that we mix all together into this fun program that we like to call the Option Block. My name is Mark Longo from the OptionsInsider.com, as well as, of course, from the ever-exciting Options Insider Radio Network. A legion, a plethora, a myriad of programs for you guys to choose from. Easiest place to find it all, of course, the mothership, theoptionsinsider.com, as well as, of course, iTunes, TuneIn, Stitcher, wherever you find your favorite programs, I should say. We are there. And the easiest place, if you're just subscribing to the Option Block, you want to say, how do I get all the extra stuff? Grab our network feed. Just simply call the Options Insider Radio Network in most places that you find our content. You subscribe to that, one button, and you're done, and you get it all. So prepare yourself for an epic options adventure. And, of course, however you listen, including those of you who can join us live every Monday and Thursday, 3 p.m. Central, 4 p.m. Eastern, via Mixler. We love you guys, too. And then you can, of course, ask us questions, ask us comments, or send us comments. Do whatever you want. We love to hear from you guys. You guys are the reason we do this show. And joining me on the old program today, let's just draw a name out of the hat. Luckily, I have a nice stovepipe hat in front of me. My first name I'm pulling out here, Uncle Mike Tosaw from RCM Wealth Advisors. Uncle Mike, are you there, sir? Are you joining us from the paradise on earth known as St. Charles, Illinois?
Oh, I am here and in paradise as we speak.
There you go. So all is right in the world when Uncle Mike is beaming in from the paradise known as St. Charles, Illinois. And we are also joined a little bit farther from home, but a little bit closer to his own personal ice rink by the Rock Lobster himself, Mr. Andrew Giovinazzi from OptionPit.com, joining us from the Duchy of Maine. Mr. Rock Lobster, welcome back to the program, sir.
Sadly, the ice is melted. My early ice is gone, so I got to wait again. It's kind of sad.
So you had a brief taste, a tease of ice, if you will, and then it got whisked away.
Yes, exactly. It's teased, so now I gotta wait again.
The great ice tease of 2016. When will the poor Rock Lobster get his ice? We shall see as we keep on rolling right on into the trading block.
It's time to break down the latest topics, trades, and trends in the world of options. It's time for the Trading Block.
All right, buddy, welcome to the Trading Block. Like the man said, this is the portion of the show where we break down what was catching our eye in today's activity. I apologize if I sound a little bit different today. I got a bit of a cold, bit under the weather, but it hasn't stopped me from bringing you the option block today. Come hell or high water, rain, snow, or sleet, you get your option block. And today was an interesting day. Most of the major indices closing up fractionally on the day. Nothing really to speak of. Net close to close up about 0.2 of a percentage point or so on the S&P and on the Q, and a similar percentage point on the Dow. Interestingly enough, VIX cash also getting a bit of an inhale today, back over the 12 handle to the tune of a 12.36 there to close the day. So a lot of people have been watching it and watching that mythical, magical 12 handle, which it did indeed break earlier this week and is now back over again. So it is conspiring to make, it just gave me a taste for my vol views pick of being correct, and then once again flirting and throwing it in my face, kind of like your iced teas, Mr. Rock Lobster. Meanwhile, Uncle Mike, what is catching your eye in today's activity, sir?
Well, since Andrew's muted, let me be the first to say bad things about the state of Maine. Let me say bad things. Oh, wait, I don't know if he's muted anymore, but anyway. With the state of everything that's going on today, I think that I'm focused on just the kind of the same thing that I was the other day, and that would be oil and money. And with oil and money, money, of course, being XLF, the financials, that's one that it's up 1% again. And energy. I think that energy is one thing that's going to kind of continue to come up. I mean, I'd like to see it have a pullback, so I could tell people now might be a good time to get into it, but still have not had too much of a pullback. It continues to, the high we hit the other day in oil, I'm showing 52.42, and came down a little bit, but today it's coming right back up there, just shy of the 51 mark. So with that, I see good things ahead for energy. Of course, natural gas hit another one-year high yesterday, came down, and then now it's getting close to the one-year high again. So we're just a couple pennies away from that. So I think that with those two sectors, that's where we're going to see a lot of action over the course of the next month or so. In terms of the option activity, in terms of other things with which I watch, Apple is up $1, and so I think it'll be interesting to see if that continues. They just had their lawsuit issues with Samsung and stealing their ideas and that type of thing. So it'll be interesting to see what happens after that kind of settles a little bit. And overall, this is just a good old-fashioned financial rally bull market. And if the other things come on board, the other things, of course, being technology, I think we could really see a lot of great things coming over the course of the next month or so. With technology is coming on board over the course of the last few days, but it has not had the stealth move that the financials have had over the course of the last few weeks. So that's what I'm seeing today.
All right, and I think he's figured out the mysteries of the mute button, so we are joined once again by the Rock Lobster himself. Mr. Rock Lobster, what caught your eyes aside from the arcane minutia of that thing called your Skype headset?
My Skype headset, it's in Maine, you call it the lobster claw when you try to hit the keyboard, but you just whack the wrong keys because your fingers are not fingers, they're lobster claws. Did you know that?
I'm not up on your Maine lingo. All you hip kids are saying up there in Maine, sir.
Okay, hip and Maine don't really go together very well. I just want to let you know. What's going up on our screens? Besides, I actually spent half the day just explaining why the VIX and the SPX can go up at the same time. Mostly it was just the shocking move we had up in the market yesterday. I think yesterday was the first day where oil stocks, commodity stocks, financial stocks, and technology all rallied on the same day, resulting in the palooza of all-time highs, I think, from did we even get that from Tosaw already? Has there never been a better day to sell stocks?
It's getting old. It's getting old.
He's getting a new catch. He's working on a new catchphrase as we speak. We expect to have it by the end of the show.
I got to come up with some new material because it keeps happening too often.
It's scary. And the thing is, I was just telling what really caught our eye is the difference in, because we kept, okay, can we get to 220? Can we break through it? The market has a different kind of flavor. So when you have the financial crisis, most of the time was just kind of spent getting back to where we were. And then you had 2013 and, it kind of blew up to kind of start making new highs again. Then the market starts making new highs, back and forth. And now we're breaking the old highs and it's kind of bully time again the only thing that I can think that's really happened in the last month has been, that was a month ago today. Trump got elected. I guess everybody's, at least people that buy stocks seem to be happy about that. or everybody that is, there's massive short covering. You take your pick on what you want it to be, but we are going up. So, but now, now we have a very low VIX, 12.5, which is about the low of the year. I mean, we touched a couple lower points, but I mean, you're down in the lower, at the lower 5 percentile for volatility for the year. It's hard to believe that the S&P 500, SPX, was 1850 in January, February. That is a lot lower than it is now. So, you get the market starting to do goofy things. You get Goldman going up $5 or $6 a day, day after day. And that is reminding me of, party like it's the late 90s, where there is massive revaluation of what's possible, at least in the financial companies. I mean, the summertime, they're all trading at what, like single-digit multiples, something like that, 8, 9. Oh, it's all so sad because they're going to be sued out of existence, and Hillary's going to get elected, and it's all going to be the same. And now, it ain't. It also might be a more conducive environment to exploration and exporting. Who knows? I don't know. Could be. So now maybe some of these commodities, there could be some growth happening that people didn't think was going to happen before. So if you start to revalue stuff, just like, the internet, everybody, revalued what was possible for a business. Not that it was necessarily right, but all of a sudden everybody just revalued everything at the same time. So the upside looks different for equities. And when there's more upside, I like gamma because options level bull market. They do. Because you can buy very, very cheap out of the money options or near the money options, and they become worth something. And mostly, as you and I joke all the time, that is a fool's game, buying a bunch of out of the money options. But in a happy bull market, that's a different story, because like I said, there's new values put on things, and stocks go to places prior to unknown, and that's currently where we find ourselves. So at Option Pit, yeah, we're looking at ways to buy as much gamma as we can and have it financed somehow, and just let the market go where it's going to go. So,
how much do you guys love over there at Option Pit these days? Even these little infinitesimal days where they're moving in lockstep but a small amount, but these days where in the S&P and the VIX move in the same direction, because it must just light up you guys with questions, and this is kind of almost like tailor-made for you guys to get into a discussion of all things of the minutia of VIX. So days like today must be kind of like candy for you guys.
There's a lot of discussion. We came up with, again, several trade ideas, because it's not that this is a lot of trading volatility is you've seen it before. The VIX does this, the market does this. What's the trade that has the best chance of success when these things are happening? So that's what we cover. So when you have a market like this, the trades that tend to work are diametrically opposite to the trades that were working in January or February, because it's a different market. Volatility is doing different things. So yes, we explained what's happening. It's mostly because implied volatility gets so low at the money, liquidity providers have to jack the vol up. So I remember trading in the SPX, when implied vol at the money was like 8%, but we're rallying 1% a day. So Longo, you used to adjust your sheets higher because I'm not selling any more of this because I'm getting run over. And that is actually the same kind of effect almost as when vol explodes on the downside. It's exploding to the upside because it has started too low to begin with. So that drags the VIX up. It's not necessarily bearish. It's just the market's moving. We're exploding on the upside. Now, is that an opportunity for the downside? Absolutely. I mean, you could see things, but now all of a sudden downside flies and other positions start to look a little more interesting because volatility is being stretched a little bit. So, but that's why, that's kind of why we had the rally in volatility yesterday, because we had that sharp move, almost a 1.5% move when at the money vol is 8% is huge. It's like twice what the market was pricing. So that's going to drag vol up. There's no way around it. It's because the realized vol is too high. So
it's like upside vol is still vol somehow. How could that be possible? Volatility.
Yes.
I don't know if anyone told you, Andrew. Volatility is only to the downside. That's how it works.
Exactly.
And
Where's Don when we need him to explain realized vol? This is where we would just cue our realized vol Yoda just to come in. If it was a perfect world, and his little head would pop up.
Options are for selling or not selling. There is no buy. Sell or sell not. There is no buy. That would be
exactly.
If he was Yoda. That would be his saying.
Today he would say there's no sell.
But it is funny. You mentioned about January. So I was talking about this with someone the other day. It seems like a lifetime ago that we were in that January time frame into early February, where this time last year we were winding towards the end of the year, and we were doing talking a lot of stuff we're talking about now. What's the Fed going to do? A lot of people, the vol was relatively anemic. A lot of people weren't pricing in much of anything for the new year. We were kind of asking that question we always ask around this time on Vol Views and on this show and others, which is, what possible drivers could there be for volatility going into the new year? Didn't really seem like a heck of a lot on the horizon. And then bam, out of the chute, literally the first trading day of the year, the market just took a sucker punch and it just proceeded for the better part of the next month and a half, where 1+2% moves a day, and it was a very rollicking period. It seems like 10 years ago now, doesn't it?
It seems like in my last decade. That's a little joke.
It seems like it was somewhere around the .com boom that happened.
It does. But that's what I think. That's and right now, and actually when we were looking at it, I think the vol was it literally took like that mini dip down in mid-December and then went straight up to the moon. So I find that interesting, to say the least, that we definitely have something a little different today in that. I think the tenor of the market, because and now I think another thing today is the Europeans we'll talk about where's Alex when we need him, but the macro issue I'll talk about is now the Europeans are starting to wind down QE. Apparently they're spending less, buying a bunch of bonds, and which is he's got to admit, think it's just a fool's game at this point. But the market is it's almost like we've forgotten about that now. The Europe. He's just buying less bonds, and that used to freak everybody out. But today we rallied. So it's maybe things are getting back tomorrow, or the government's getting out, and the equity markets will be the equity markets. So that's kind of what it looks like. But it doesn't mean tomorrow we'll be down. We can't be down 2%. That always can happen. But I guess we'd have to wait and see. We need a good reason now.
We do need a good reason. We never need a good reason to keep on rolling, though, into one of my own personal favorite segments. It's time to get wild here and crazy and dark and mysterious, because it's time for the Odd Block.
It's time to break down the most interesting, unusual, and downright questionable options activity that's been identified by theoptionsinsider.com. It's time for the Odd Block.
All right, everybody, welcome to the portion of the show where Andrew and I, and sometimes Uncle Mike, if he's feeling daring, don our fedoras and our trench coats, perhaps a nice little sidearm, and we venture down that dark alley that only crazy people like us dread down, which is, of course, the Odd Block. Let's kick it off. Actually, let's go back in time. We got a little bit of extra Odd Block love for you today. And one extra name. Going to kick it off looking back yesterday at a name that is near and dear to us, of course, good old CBOE. A ticker symbol, CBOE. Surprise, surprise. Closing today about 75 and a quarter, up nearly $0.50 today, which is a fair high level for CBOE. I remember when they broke 60 not that long ago and thinking, oh, that's crazy high. And now here we are, 75 and a quarter, so setting new paradigms. But apparently, Mr. Rock Lobster, that was not enough for one of our friends yesterday who's coming in and just straight up feeling the love, straight up swinging for the fences, saying, 75, pshaw. I laugh at that. It's 80 and above where the action is here in CBOE, and willing to put his money where his mouth is to the tune of about 5,000 of the Jan 80s. That just sounds crazy to say, CBOE Jan 80s. I remember this name listed. I had to sling a few options in it just to start because of the meta fun of trading options on the CBOE. It was kind of near and dear to my heart. It was kind of fun, but I haven't really touched it since for a variety of reasons. But just seeing it back when it was vacillating around 30 and then hitting 60, like I said, and now our friend here piling into the 80 strike. Doesn't look like any real stock went up against it, so it is, as it appears to be on the surface, someone loving themselves some CBOE and saying this far and farther to the tune of the 80 strike, which is it seems kind of crazy cakes to me, but it's printing 75 today, Mr. Rock Lobster. So perhaps our friend here is on to something. They all know the more we widely mock a trade, the better chance it has, correct?
All I can say is it was so high on our mockalator. Maybe we should have a new indicator for how much we mock something. So then I can I'm just going to go buy 1,000 shares of CBOE and watch it go up, or at least maybe 10 of the Jan 70s, I think. Because everything that looks mockingly impossible somehow magically, improbably comes to fruition. How does that happen?
It's the mockalator. It's our new indicator, the mockalator. The mock-centric, whatever we mock intensely. Started a while ago, but really came to fruition with Men's Warehouse. That one we roundly mocked, and lo and behold, that guy did all right. And so every now and then, sometimes the guys who play the horn high yo, to use the craps analogy, they play these low probability trades that do deserve to be mocked because they are very low probability. Once in a while, even a blind squirrel finds a nut. And we like to profile a lot of blind squirrels here on the Odd Block. Speaking of which, this guy must be blind and just for size, because our big trade of the day was on everybody's radar. Even CBOE wrote this up. That shows you how big this trade was. It was kind of hard to miss. It was going up over there in XLF and just crazy cakes to the tune of, well, first off, you don't know XLF. Of course, this is our big friend, the XLF Financial Select SPDR, closing today about 23.70, up about nearly 1%. Excuse me, got a bit of a cold going on over here. And as this name does, decent paper, about 186,000 contracts a day. Today, doing a little bit more than that, to the tune of 840,000 contracts, pushing nearly a million, pushing like VIX territory here, which is just crazy town. About almost 4.5 to 1 calls over puts. And a good chunk of that 800,000 plus coming in one size, just festival of upside love here for XLF. Someone said, these financials, they've been doing all right lately. I think that party's continuing, and I'm just going to gobble myself up some to the tune of 250,000 of the Jan 25 calls going up for 13 cents. So not a whopping expenditure there. And then a total, there was some underlying going up with this as well. When you see a big trade like this, you're usually going to see some underlying with it, and that was the case here. To the tune of, looks like about 1 million or so shares going up in 2 blocks against the calls. But it does appear that these were indeed buys, Mr. Rock Lobster. No open interest, or 77,000, but nowhere near enough to cover this size print. But it seems like someone is saying, they did it with stocks, so it was a little bit of a different beast, but someone's saying XLF is going somewhere. It's like the bar closing at the end of the night, to use your compatriot's favorite analogy. You can't stay here. It's got to go somewhere. That's what someone's betting on here in XLF. Is that your feeling as well, sir?
I do. We try to recreate like a poor man's Reg T version of this, because the average person just can't short 1 million shares of XLF and buy 250,000 calls. So we try
Speak
to
for yourself,
scale
sir.
it down. We did the scale down version of 50 of the 25 calls and 10 only of the 25 puts, trying to, create a similar loaded strangle or a loaded straddle on the upside. So that would be basically a delta neutral way to do it. Maybe try the 24 strike, but a huge purchase And I think the way it looks like, you buy 250,000 calls and you have a nickel mark in your favor the first day. So I think they're doing
I noticed
okay.
that. I noticed that. I didn't see where he got his stock off, but I'm assuming that's leaving a bit of a mark. But the nickel on the options, that'll leave a smile on your face at the end of the day.
250,000 times. I think if that was us trading, we'd be done for the week. If we made a nickel 200.
We'd be over at series.
We would be over at series. So he only lost 15 cents on the million shares. So I think he's still. I think he's going to be to the good.
So he's doing all right then. He's still a happy camper. When I first saw that, I was like, I got to find that stock print because I was just assuming that he was wearing it on the stock. But sounds like a good day was had by all.
The vol went up after he bought them, which always I think helps. There's nothing like having the implied vol go up.
Fancy how that works.
Purchase. So
you buy all the paper in town, and somehow the vol goes up. How does that happen?
Exactly. And what's funny, this does not rate on the Maculator because it is it's well within one standard deviation of how how XLF has been moving. If Goldman's going to move $5 a day every day for 4 straight days, it's like an internet stock in 1999. I don't know what else to say. It's crazy. So, best to be careful in selling your contracts and fading these moves. And they could stop at any point, but man, it sure doesn't look like they're done buying these things.
Our managing editor, Danielle, is chiming in here in our chat saying it's kind of like the Greasy Meatballs wild man indicator. I don't know, you weren't on last week when Mark was on in studio, and he was talking about this is a little bit different than that, but kind of a similar thing. He was talking about how he wants to create a screen in Live Vol or maybe on Trade Alert where he can just screen for people who do crazy things like with a couple days to go. This is a little bit longer term than that, but size-wise, I think she's onto something. So maybe this would come up on his wild man screener.
Totally.
I kind of want to. We'll have to do something like that. Have our wild man screener of the week type trade. But yeah, this one certainly would qualify size-wise, if not duration-wise, for all that fun stuff. All right, moving on to that was definitely one of the crazier prints of the day, and one that certainly caught a lot of our attention. But moving on now to another name that's been printing a lot of late and causing a lot of interest and a lot of movement, of course, with a lot of the other financials. This thing was trading 16 handle not that long ago, about almost exactly a month ago. It was trading in the 16 handle. Now trading a nice 23, up near 2% again today. This is Bank of America, ticker symbol BAC. Excuse me. Doing about 441,000 contracts a day of late. So this one also just lighting it up. Today doing over 1 million. So this one definitely doing VIX paper. VIX is kind of that barometer for the name that could regularly hit 1 million without breaking a sweat. And some of these names now in the financials are starting to rival it. 2.5 to 1 calls over puts. This one a bit of a funky one, Mr. Rock Lobster. First off, there was paper. As 1 million contracts, as you might imagine, there was paper just everywhere on every strike. And you pick a call strike in Jan, and you pretty much saw 20,000, 30,000, 20,000, 20,000. It was just one of those days out there. So parsing any one trade, first off, in this kind of explosion of volume is kind of like picking your proverbial needle in a haystack in terms of what the heck was that. It was a flood. It was picking out one drop in a fire hose. And that's kind of what it was like in BAC today. But we did find one of interest. It was the Jan 20, Feb 22 spread, and I say spread because it kind of went up a little bit funky. We saw, 2 chunks on these, both for decent size. At the end of the day, the 24s, Jan 24, Feb 22. 24 is doing about 27,000 net on the day, and the Feb's doing about looks like about 6,000, so a bit of a ratio there. But still looks like, and the weird thing about it, they went up in 2 blocks over there on the Amex, 52 cents on the Jans, $1.79 on the Feb, so a little bit richer obviously on the Feb, a little bit meatier as well. And this is interesting because there's size open interest on both strikes, so about 44,000 contracts on the Feb, and on the Jan about 20,000. So it probably isn't probably is closing there, which was kind of the indication. Also, but weirdly enough, both of them went up through the offer. which is also a bit funky. You don't usually see that. Usually you see one of them obviously leaning heavier one way if they are indeed going up. So it could have indeed been, at least the initial prints, been maybe closing on both. Maybe there was a bit of a old diagonal time stupid. Sure, I can see Mr. Tosaw's eyebrows popping up on that one. Or perhaps some other funky stuff. We also saw some closing on the Dees Weeklies, 22 halves not too long ago as well, on an interesting play there. Mr. Rock Lobster, I'm about to sneeze, sir, so take it over. What do you think here on good old Callpalooza and Bank of America?
Sneeze hugely. The first thing is, why would somebody trade the Feb 22s but then trade the Jan 24s? That's, you normally, if you have a roll and you're rolling up, you would roll to the higher strike, not to the lower strike. So my thought on this, and of course it would be speculation because I don't know what the underlying position is, but since both traded on the off or outside, they're trying to close the Feb 22s, which they probably thought were a lock for a buy, right? Because there's no way bank could keep going higher. And then they sold or tried to sell the Jan 24s above. There's so much open interest that it could be like a close and an open, or like Mr. Longo said, it could be the Mike Tosaw split strike, split month stupid.
Ratio stupid.
Ratio stupid. It's hard to fault the guy or girl because bank just keeps going up. I remember looking at this summer, it was like $13. Bank of America was $13, or I was short some 12 puts. And I'm like, oh, I made my 12 puts, and then, I made my 25 cents on the puts, and now the stock's, $9 higher, something, $10 higher. So the life of an option trader, you make quarters and somebody else makes $10. So anyway.
Yay, 25 cents. Oh, wait, $9.
Yeah, why can't I get put on those and hold them? I would have ridden those for a while, although I probably would have been called out at 14 or something.
Yeah, you would have. There's no way you would have rode the whole thing. You maybe got a part, but you would have got a couple of bucks. Maybe I would give you that.
I would have got a couple of bucks, but I definitely would have been it would have been the wheel of Palooza, and out I would have gone. So, it was a subject when the banks first started moving a little bit, when there was that. We were talking that rate talk, there was quite a shiver in middle of the summer, I remember. So we had a couple of interesting trades in bank and JPM and in the pit chat for a while that made clients happy. So now just all I can say is you get out of the way until they stop going up, and I just have no idea when that will be. So it's crazy town.
Crazy town indeed. And if you like Crazy Town, listeners, we got you covered because it's Thursday. That means it's time for Uncle Mike to take us all on a tour of Crazy Town with the Strategy Block.
It's time to dispense options, wit, wisdom, and education. It's time for the Strategy Block.
All right, listeners, like the man said, excuse me, having a bit of a coughing fit over here as well. I'm just falling apart here behind the scenes, but we got the show. Keep on rolling for you. Thankfully, Uncle Mike can talk for a little bit while I get myself together over here. But it is indeed Thursday, the portion of the show where Uncle Mike comes on down from the mountains to dispense some options, wit, and or wisdom. And Uncle Mike, I was trying to chat with my minions today. They seemed to have my cold as well, so they were coughing and sneezing. It was kind of hard to make out. On a good day, it's hard to make out what the heck they're saying. On a day like today, it was virtually impossible. But there was something they were putting on helmets, and they were kind of hitting themselves in the head. So I was trying to think they're going something with protection, and then they were like stomping boxes. And I don't know what the combo protective, how to jump in a box for protection. Maybe is that what they're on through? Otherwise, I have no clue, sir.
Those minions are something else. I mean, maybe you should hire some Ewoks, too, to kind of diversify. You got birds, you got minions. Maybe you need some Ewoks.
Even more nonsense to add to my menagerie over here. That'd be fun.
That would be. So, all right. So today we are in a market that has been going up. There's no question about that right now. And so what I want to cover today is a trade I did recently on an Apple collar that I put on back in January, actually. Now, as I've said on this show before, I don't have near the exposure to Apple that I had back in the Apple heyday. So I want to emphasize that again. We're millions of dollars less than what I had before. But what I want to go through is what we did at the beginning of the year, just as kind of a more passive position. Apple in one client's account was at around $95. It was on January, I'm just looking here, the 28th. And so on there, wanted to have some Apple exposure, but I didn't want to have too much downside. So we just did a very basic 1-year collar on it. You see, even on passive holdings, you can't resist. These option things are just so much fun. You got to put something on at least, even if it's a very passive holding. Just kidding, of course. But with this one, we felt that we wanted to have some downside protection. So with Apple at 95, we put on the January 2017, about 1 year out. We bought the 85 put, and we sold the 105 call. $10 to the upside, $10 to the downside, approximately. Plus, you get to keep all the dividends. So, of course, Apple's rallied a lot. And recently what we did was we wanted to roll it up. We wanted to just kind of take a look at, because Apple is above the one at this point. This one is one where we're going to get called away on most likely, and perhaps we'll do a 1-year wheel of fun trade on it. Who knows? But there is still a little bit of time decay in the 105 call, and this is kind of at a stage to where, if it gets called away, great. But if it comes down a little bit, then well, we got essentially $7 of free downside protection at this point because the covered call's in the money. But what we don't want to have happen is have Apple go down to 70, although I kind of do want that to happen because I think that'd be kind of fun to buy in at that level. But let's say Apple were to go down to the 70 level. We had some type of crazy market of some sort. We had the crazy November market to the upside, but maybe the crazy December market to the downside. Who knows? It could actually happen. So let's say Apple did go down significantly and went down to the 85 level. Well, I'd kind of feel silly if we put on this collar, had Apple go way up, and then have it come way down to the 85 level and not have captured some of that. So a very basic thing with which we did, and if it were to start coming down again this late in the collar, meaning we have roughly 6 weeks to go, then we would start to take other actions in terms of possibly rolling down the covered call or rolling out, doing other things. For now, there's no action that needs to be taken on this trade because we're being very passive on it. But what we had the opportunity to do the other day was sell the 85 put and buy the 95 put for January in the same month. And we did that for a whopping 15 cents. So what we were able to do is add 15 cents of time decay to the trade, which I was fine with. And by doing that, we have made this into essentially a risk-free trade. Now, we took risk during the trade, but what we did do is we locked in our basis. So what I want to emphasize is if you are trading a collar and it goes higher and you have some time left in it and you have some concern about it coming down, which I think a wise trader or a wise investor should have concern over anything, no matter how good it is, then rolling up a put can be done for a relatively small price. So for $150, I was able to take away $10 on a 10 lot. I was able to take away $10,000 worth of risk. Now, I like that personally. I feel very comfortable with that. So now if Apple were to start going lower, then we have some type of protection in place. Now, the likelihood of it going down there, I will be the first to acknowledge that is slim at this point, very slim for that matter. But if for some reason it does happen, we put our protection in, we were responsible with it, and we did stuff. And because as we've established on this show many times, doing stuff is important. Now, the next thing that I want to talk about is a similar technique with a spread, a vertical spread, that if it were to go against you in the same day. Let's say that it's early morning, market just opened, or late morning if you live out in Maine, because the market opens later, opens at 9:30 out in Maine. But let's say it's early morning, and market just opens, and you put on this put vertical. XYZ stock is at $100 a share, and you sell the 95 put, and you buy the 90 put. and you like this trade. You're bullish on it. You got $5 worth of cushion between your puts, between where the price of the underlying is and the short strike price. I mean, you're feeling pretty good about this trade. But it starts to go against you, and it starts to come down. And let's say that you have a smaller account. Let's say your account is $12,000. And if you were to get out of that trade the same day because the stock just went down to $95.86, a little too close to comfort, and let's say that the delta has gone up to a level to where you've lost however much money that you were comfortable losing, and you're a smart trader, meaning you get out of those things before it goes too far in the money. If that's the case, then you need to get out of it. But if you have a smaller account, you're going to get flagged as a day trader. Now, you're not allowed to do, if you do more than 5 day trades in a 5-day period, five trading days, that is, then you could get your account frozen and you won't be able to trade anymore until you can get the account above $25,000 or wait for a certain period of time, depending on what your broker's policy is. So day trading is not something that you want to make a habit of unless, number one, you have more than $25,000 in your account, then who cares? Or let's say you're doing this with futures, then there is no day trading violations in futures. But let's come back to what do you do if you are in this situation? Now, you could day trade it and get out of it. And if you do that, you only have 2 day trades on your record, and you just simply maybe don't trade for the next few days, because if you get in that situation again, you want to be able to do it, or you only do it with 1 more spread. But either way, it's not something that you want to use if you don't have to use it. So the other strategy to avoid that would be maybe just always do your trades right before the close. That works for some people's systems. It doesn't work for other people's systems. But what I wanted to let you guys know about is something that I did probably a year and a half ago. And this is just something to add to your trader toolbox. And what this can do is take away your risk and make it so that you're not going to get dinged for a day trade. What you can do with this is something called a box spread. Now, a box spread is something from, it's a very old term, and not many people even use it anymore, quite frankly. But what you can do is, if it is going against you, you can actually sell a call spread at that same level. So in other words, you are short the put spread, and by being short the put spread, you're in a bullish position. Now, the opposite of a bull put spread would be a bear call spread. And by doing that, let's say that the stock goes down to $96 a share, you can sell the 90 call and buy the 95 call. And by doing that, you've flattened out your position. It's a totally different trade. That's how the margin people look at it anyway, the margin and risk people. And you have absolutely no risk at that point. Now, of course, there'll be commission risk, there'll be bid-ask spread risk, meaning you're going to have to pay another commission, you're going to have to do another bid-ask spread. But if your back is against the wall and you have to do that, that's something to do. I have some clients that are 7-figure accounts, and I have some clients that have less than $25,000. And I was in a position about a year and a half ago to where I had to do that just because I couldn't let those. The last thing that I want is for clients to all of a sudden get an email from TD Ameritrade saying, "You are a pattern day trader." What? When it's something that happens rather rarely, and we just need to get out of it for purpose of risk. I don't want those emails going out to my clients. So to avoid being dinged on the day trade police and still manage risk. So strategy block for today, it's a way with which you can roll up your puts if you've taken some gains on stocks and if you have a collar on. And also, if you're in a situation to where a vertical goes against you, you have the ability to box it off. And those are the strategies for today, December 8th.
A little bit of sound craziness there, Uncle Mike. We liked him so much, we gave you a couple of extra doses of him, but it's all sorted out now, listeners. We got a few extra minutes here, so let's see if we can get into a couple of your questions really quick here on the mail block.
It's time to take your seat on the All-Star panel as we read your emails, tweets, Facebook messages, website comments, and much more. It's time for the Mail Block.
All right, well, we asked you guys at the beginning of the week, what did you think was going to happen with crude vol, courtesy of our good friend over there, OIV. You guys were pretty much all leaning higher to the tune of, as we speak, over 40 was crushing it. Let me see if I can get the exact number as we go up here going into the show. Above 40 had nearly half of the vote. About 21% said below 37, so you guys looking good. About 16%, 38.5 to 40, and about 16% between 37 and 38.5. Lo and behold, OIV taking it on the chin today, down to about 32 now. So all of you who leaned south of 37, that small percentage of you guys, you're looking pretty good. Good stuff indeed. All right, see what else we got here as we go down through the list. A couple questions about December here. What happens in December with options? Let's start with this one from Eddie. He says, December trading, is for options, what typically happens, and is this a busy time for the options market? Traditionally, no. December is not exactly a rock'em sock'em month. You can probably think off the top of your head some of the reasons why that may be. You know, there's just fewer trading days just to start off with, in terms of there's so many half days and holidays and everything else going on in the month of December. That's hard for anything really to get rolling. Whenever you have long weekends, holiday weekends, when it comes to options traders are the first to get the heck out of Dodge and dump everything and not want to pay decay. So we see a lot of that playing out typically in December. That said, there have been a few months where surprise things have happened, and December has been more active than usual. But in general, December not a month you go to for, hey, this is the month we're going to really tear it up. They don't call it Rock-Cember or anything like that, like they do Rock-Tober. I don't know. Anything you want to add here, Uncle Mike or Mr. Rock Lobster for Eddie? He wants to know what's up with December.
Yeah, in all my years in the business, and you guys can probably stay the same, I don't know of anyone that's ever said, man, we're going to get a lot of action on the 27th and 28th of December this year. We're going to need extra people on the desk, boys. We got to really be prepared for this.
Wow. So December-wise, all I'm going to say with December is that we usually almost everything trades a little cheaper. So then when it gets a little bid, generally I think it's a bit of a sale. But I think we just had the little vol pop we had probably is the last vestige of volatility for December. But that's kind of how I look at it. Everything, like Mark said, liquidity providers, they price the days out early. As he said, they get out of Dodge. They also get out of Dodge by making things cheaper. So December VIX futures trade a little cheaper, and in general, that vol on the term is depressed a little bit. So I think it is a good time to grab Gamma. Actually, it's a trade we did yesterday in our chat room right before everything just blew up in a good way, because the vol for next Monday's option, even though the weekend's decayed out of it, was 6.2% at the money. So I mean, the at the money straddle we had. Yesterday was Wednesday, so we had Wednesday trading day, Thursday trading day, Friday trading day, and Monday trading day, and the at the money strangle was like $12 in the SPX. 4 full trading days to go. That looked a little cheap to us. So I think the opportunity is, if you, like Mark said, since there is some accelerate or some, let's just call it some early decay by liquidity providers, sometimes they decay the options too fast, which I think was the case yesterday. It's not that, they're dumb. They're just like, okay, if nothing happens, we're going to make everything cheap. And if you want to sell them to us cheap. And that's just a function of the market. It's the way it is. So I think that's kind of where the opportunities are. And when things become sort of normally priced, you sort of like, oh, why is it normally priced? Because it shouldn't be. So that's when that's when you're looking around for something that might happen off the cuff.
some of the people joining, tweeting in and chiming in live by the chat. We got our buddy Ofer Gottlieb, formerly of Live Vol. He was commenting. We were talking before about the CBOE Jan 80s, and he was saying we speak the truth about someone gobbling those up, and he tweeted out a chart to that effect. We do speak the truth here on the show from time to time. We've been known to do that, but he was also interested in someone gobbling up the Jan 80s for 40 cents. So not the only one feeling a little interest out there in the CBOE. We got a bunch. I'm trying to think if we can do any of these other ones. We only got a couple of minutes left here. Let's. I think we'll table the rest of these for the Mega Monday mail block because all these answers are a little bit longer than we have. So keep them coming, though. Keep the questions coming. We'd love to hear from you guys. We're going to keep on rolling into our final segment, Around the Block.
It's time to tell you what we'll be watching on our trading screens until the next episode. It's time for Around the Block.
All right, everybody, welcome to Around the Block. This is indeed the portion of the show we tell you what we're keeping an eye on for the rest of this week into the weekend. At this point, the lion's share of earnings season is behind us. Once Thor Industries has reported, we know the season is done. But there's a couple coming out tomorrow, but morning, and a few more going on. But no, not many of the big names. We know a lot of you guys like to watch the ones that tend to move the market. We also saw our last non-farms before the Fed, so that was the last big number that people are really tuning into to see maybe something, if anything, that could potentially derail the Fed's planned rate increase. It seemed like if anything could do it, it was that non-farms. Didn't happen. We got consumer sentiment tomorrow, but that's not really usually going to move the needle there either. So it seems like everyone's kind of playing the old wait and see for what Miss Yellen and company, what they will do. It seems like 25 basis points or so already pretty much baked in. If they exceed that to the upside or maybe don't do anything at all, sit on their hands, it will be interesting to see how that plays out. That said, Mr. Uncle Mike, we'll start with you. I know you got Fed on the horizon. What else are you watching for the rest of this week into the weekend?
Oh, gosh. Just seeing if we get another new all-time high. I'd like to not have an all-time high for a week or two, then I can say my thing again. But I just can't say it when it happens every day because it's not news. I'm watching the numbers to see if we can continue to make new all-time highs. When we're going straight up like this, there will be a pullback at some point, most likely. But trying to predict it is a losing game, I think. So just try not to fight the bull right now. And besides the Fed, just watching the numbers to see if we can continue to come up another 0.2% every day and make a new all-time high and have it splash across the internet.
There you go, Mr. Rocklops. Your same question for you, sir. What is catching your eye for the rest of this week in this period where Uncle Mike is diligently working on his new catchphrase?
I'm all for Uncle Mike in his catchphrase. We are looking for. I think we're just looking for contracts, looking to see if the financial can keep going. If technology will, because technology is, it's trading at near highs for the year, but a lot of the stocks are not individually. Couple are, a couple aren't, as far as like the big 5 or big 10 go. So, if that could catch fire. So just looking for cheap gamma, protection-wise, SPY put butterflies and stuff like that are really cheap. SPY put time spreads. So, you can look for trades where, you have upside and you can kind of hedge with just SPY put time spreads because of vol so low. And if things just go, you have, you can be generating what is known as alpha for yourself. So that's what looks interesting. That's very similar to what I did in the 90s. I wasn't trying to get really smart. I just bought some gamma and try to have a little protection around in case something like an internet crash happened, which eventually it did. So what the heck? If it worked once, might as well do it again if the same thing's happening now. It's just different stocks.
All right, listeners, that music means we've come to the end of yet another epic sojourn through the world of options. Touched on a lot today. Touched on Bank of America, XLF going crazy, CBOE going crazy yesterday, and getting some more love and interest today, and a bunch of other fun stuff. VIX and all things sundry in the volatility space, and just a lot of fun stuff. Uncle Mike talking Apple boxes and put spreads and protective collars out there, getting nice little check back in on all things Fruit Company, which we haven't done in quite some time. We're still due for a little bit of Apple love here on the show, and Uncle Mike was our resident Apple go-to guy, so nice to see a little bit of Apple love. By the way, I love it when we don't have time on the show to answer questions, and our chat room does it for us. They're answering questions for each other back and forth, so if you're lurking in there, listeners, you too can ask questions for someone like Henry and a few of the other guys who are floating around in there who can answer your questions with hard data. We love that. So even if we don't have time to get to it, ask away in there. Maybe someone else will answer it. And if not, we'll try to get to it on a future show. But before we go, of course, let me check back in one last time with my cohorts, my partners in crime. Let's start with you, Mr. Uncle Mike. What's cooking in the land of all things going long and RCM alts?
Well, buy my book and send me your money. That's about it. If you're looking for a financial advisor, would love to work with any of you. Happy to work with people, both big and small, of course. And if you would like to have interest in buying my book, it costs less than the price of a Starbucks. Go to Amazon, and it's available in the Kindle edition for the updated edition, of course. And to contact me, feel free to call me at 312-212-3531 or shoot me an email at mtosaw@rcmfs.com.
All right, Mr. Rock Lobster, same question for you. You guys are always working on webinars and Saturday webinars and come to your house, in-person house calls and all other fun stuff over there in the land of the pit. So what do you guys have cooking up there these days? How much does the cost to have the Rock Lobster come to your house for an options house call?
I was about to say, I think you have me confused with Sebastian. He's the only one that does that. No, Saturday, we actually had to move our Saturday class till next Saturday. It'll be on interest rates and how interest rates affect options and your option trades. We'll be running our volatility course January and February, so you'll look for that. We will start mentioning that soon. And if I write a book, I'm going to charge $1 more than Tosaw just for the heck of it, so my sales can maybe be better than his quicker. That's all. Just because Starbucks plus $1. But can you even get a Danish for $1 at Starbucks anymore?
Do they have Starbucks in Maine? Maybe? Is there one Starbucks, and is it up in Kennebunkport?
Actually, there's one Starbucks, but it is 10 miles from me.
Oh, there you go.
That just tells you something.
So if you want your coffee, you have one spot only in the Duchy of Maine. Check it out over there, optionpit.com. Will be fun to see when your book costs $1 more. We can do a nice compare and contrast. Of course, there's a couple ways to measure. You got volume of sales, you got revenue of sales, so we'll have to compete a couple of different ways. But I look forward to that tome finally someday coming out, Get Your Juice for Free by the Rock Lobster. And on behalf of the aforementioned Rock Lobster and Uncle Mike and indeed myself, I want to thank all of you out there in the listening audience for downloading, streaming, subscribing to the show. And of course, for those of you who can make it into the chat room every week, we love you guys too. And we'll see you next week for more of The Option Block.
The preceding program was a production of the Options Insider Radio Network. For more quality options programs, visit www.theoptionsinsider.com or search for Options Insider Radio Network in your podcast provider of choice. Listeners can also access all of our programming through our mobile app, available in iTunes and on Google Play. Don't forget to follow along with your favorite programs and submit your own questions for the hosts at twitter.com/options, facebook.com/theoptionsinsider, or via questions at theoptionsinsider.com.